Welcome to the dYdX Foundation briefing series, where we dive deep into the ideas, the people, and the projects that are shaping the future of dYdX. My name is Winnie. I am with the dYdX Foundation, and today I am joined by one of the key pillars of our ecosystem that ironically gets very little visibility. So I'm talking about the Treasury SubDAO. And G, before we dive in, maybe you can give a quick intro on yourself.
First of all, thank you so much for having me here today, Vinny. So my name is G. I'm a contributor at the dYdX Treasury SubDAO. In terms of my background, I'm originally from South Korea, living in Hong Kong. I started my career in TradFi, so I used to work for JP Morgan doing FX and rates trading. And obviously, this was back in 2017, and crypto was a big thing, especially kimchi premium, if you guys know about it. So, of course, as a Korean, I had to trade that, and that's how I got into crypto. For dYdX, obviously, dYdX was one of the first really big perps market and really presented itself as an alternative to centralized exchange venues like Binance, OKX, and whatnot. So, been a really big fan of dYdX for very long. So, super glad to be here and to be contributing to the dYdX ecosystem.
Yeah, we're super happy to have you as well. Do you want to touch on Kimchi Premium for those who don't know?
It was this period of time in 2017 to 2018 in which Bitcoin and any crypto in general was trading at a premium on the Korean centralized exchanges as compared to its international counterparts. And the reason why this existed was because in Korea we have something called capital controls. So there is a limit in terms of how much people can take out of the country. So this was like because back in in the 90s there was a financial crisis that was caused by financial speculators. So there's capital controls in the country right now. So yeah, and Koreans love to speculate on the financial market. So there was a big premium on Bitcoin and crypto prices in general.
Would you say it's what drove adoption in Korea for the most part around that time?
I'm actually not too sure about that because if you think about it, the people that could benefit from the kimchi premium were quite limited, but there was definitely a lot of interest in cryptocurrency market because it was a very novel concept, and also at the same time it did have a very dramatic price action that does attract a lot of the speculators as well.
Very cool intro and background. Maybe you can give us a high level overview of the Treasury SubDAO, your current mandate, and maybe how that has evolved over the last few months.
The Treasury SubDAO was really created to manage the community treasury for dYdX. So the mandate was to provide an end-to-end solution from starting to create a Cayman foundation to the Treasury multi-sig account for the SubDAO to developing a staking program to utilize the community treasury and to oversee diversification efforts. So it does really cover the whole spectrum of things. And we've been operating for around 10 months now, and I think right now we do have a very operational treasury SubDAO in a sense that we do all the things that I just mentioned. On top of that, we also started doing things that were not covered in the initial mandate. So, for example, facilitating the buyback program, which directs protocol revenue of dYdX to buy back dYdX tokens. And aside from that, we're also working on other ways that we can engage with the token holders and potential investors as well.
How did you get involved with the buyback program, given it was not in the scope? I'm curious.
So we really wanted a way in which we could distribute back the value of the protocol to the token holders in a way that it was non-inflationary and usage back. In crypto, it's really common to see very inflationary tokenomics. So starting from, FTX era, low market cap, high FTV tokens that were very harmful to the token holders, right? Because they'll get constantly diluted away. So we wanted a program in which we take the protocol revenue, which is in USDC, which again is very unique to dYdX, and then reinvest them into dYdX token holders, so that we can align the token holders with protocol growth as well. So that's we always wanted to do it, but of course we had to make sure all the settings like the legal infrastructure, the staking program were put in place before we could do a buyback program.
What would you say are the guiding principles that shape how you allocate capital across different programs like staking, buybacks, yield strategies?
Yeah, that's a really good question because we often wish that we had more money than we do, and I'm sure
Yeah.
everyone feels the same way. And it's really easy to be bogged down by short term priorities. Our capital allocation is really built on making uh, decisions that are superior in terms of risk adjusted returns and then balancing defensiveness with opportunities. So, for example, there will be deployments that are more protocol aligned, staking, for example, because that helps with securing the network and things that are productive. So, for example, like deploying USDC into Megavault or other yield bearing opportunities, or discretionary like buybacks, which are more ad hoc in as a program. I think for now, what we really do is to prioritize decisions that are more protocol aligned versus productive and discretionary. But of course, like all the things that I mentioned are not mutually exclusive. So for example, buyback can be, it's discretionary, but it's also protocol aligned and productive at the same time.
You touched on the Megavault and we'll come back to it. But many of your initiatives originated from on chain governance proposals. How do you ensure fidelity to those governance directives while remaining operationally agile?
Thank you for asking this question because I think in Web3 and in the DAO space, governance is often seen as a hurdle to being agile and to being efficient. And we do see that in other DAOs for sure, because DAO as an organization is very new and it's very experimental. And also it can be too decentralized and not in a good way, in a way that, it's not well organized. But for dYdX and for Treasury SubDAO, I think what really sets it apart is that it was created with a very clear mandate from the token holders. It was in the initial RFP process and it was in a proposal. And this makes our job to be a lot easier because our role is really to execute on those programs with discipline and transparency. And of course, we try to keep communication to be really open across a lot of the stakeholders, like the other SubDAOs, the foundation, the validators, and the token holders. And I think another thing that is a little bit different about dYdX is that the stakeholders are very well informed. That helps us to push for proposals and get very quick feedback and to put it through on-chain governance relatively quickly compared to the other DAOs as well.
The SubDAO has done periodic staking reviews where you shift validator delegations. How do you manage these adjustments without compromising network neutrality or decentralization?
So as you mentioned, we do assess validator performance and then change the delegation based on this data. And this exercise of like rebalancing delegation is done at least every quarter. Usually it's done more frequently than every quarter because there could be some big changes being made to either the protocols or the validators themselves. So we have a public framework that assesses the validators through a criteria, and it includes things like uptime, governance participation, what are their commission rates, and how much are they currently staking. This criteria is really baked into a formula so that we can make a data-driven decision. And one of the factor is how will our allocation impact the overall level of network decentralization? As you mentioned, we don't want our allocation decision to cause the network to be less decentralized. It's all baked into the formula. That will be like the simple answer.
What KPIs or benchmarks do you use to evaluate the success of a program, like the buyback program? How do you determine that it's successful?
We do have a few programs that we're running to deploy the treasury, and they're all a little bit different. So they will obviously have their own criteria on whether they're successful or not. But I think one thing that is, uniform or can be applied to all the programs is did we deliver what we promised to the dYdX community? Because before we do any program, there will be outlined in a proposal for on the forum, on the dYdX forum, and then it'll have, a section called specifications in which we list down, what we're going to do. This sounds really simple, but I think, trust is really essential for something like a DAO, in which we really need to show that we are doing what we told the token holders and then they voted for, making sure that the various data around the programs are also properly communicated. So I think if we do what we promise them, I think that's always a good thing. To just give you an example, okay, we'll look at the staking program. So we did have a public criteria on, the validator scoring, the frequency of, the rebalancing of the delegation and the reporting requirements. So all those data were really well documented in the initial staking program documentation, and we really do our best to stick to it. So we always have this, North Star that is a little bit more vague, but it's kind of like being accountable to the token holders and to the people that approve our proposals.
You noted in the semi-annual report on the forums that the Megavault deployment returned over 12% annualized. How does this experiment inform future risk-adjusted return strategies by you guys?
Megavault is really unique in a sense that it is both a yield generating opportunity and a way for us to add value to the dYdX ecosystem by deepening the amount of liquidity there is for various token pairs. It's good to have both because that's not often not the case. But I think our decision to allocate into Megavault was more ecosystem driven as compared to yield driven. The way Megavault works is very hard to project the future returns, although part of protocol revenue does get directed to the Megavault. But I think generally during the same period of time that we've allocated to the Megavault, Fed funds rate was around 4.5%. And if you look at SSR, the Sky Savings Rate, which is kind of like the de facto on-chain rate, it was anywhere between, I think, 4.5% to 12.5%, with bias towards the lower threshold. Clearly, Megavolt is generating a more attractive return compared to the observed risk-free rate in both on-chain and off-chain market. It does create, like an internal hurdle rate for our other potential deployments. So it has to beat at least the Megavolt performance for us to consider deploying. But again, like risk for Megavolt are a little bit harder to quantify for sure, and definitely like very difficult to hedge.
Very cool, though, that you're doing it more for the user experience for traders than as a yield strategy. You mentioned trust is very important, and transparency is a recurring priority for dYdX governance. Everything is on chain, everything goes on the forums. What tools or dashboards do you guys leverage to maintain visibility into treasury activity with the community? I know you're great with the forums. You're always posting. I think you posted like a day ago the July update and maybe a month ago the semi-annual report. Are there any other tools that community members should be, paying attention to?
Yeah, I think you're absolutely right that we're very active on the forum, and we really use the forum actively because that's where we have the most engaged members of the dYdX ecosystem. For a lot of them are really, really passionate. So definitely the dYdX forum for our monthly report, and we do have two monthly reports, one that is more focused on the financial side of things. So it's just, all numbers. So there's no context around it. Whereas the second one is on the dYdX forum, which is more focused on providing context on the numbers and the decisions that we make, what our future plans are. Two main reports. And aside from those, we also provide more ad hoc updates for the community for new initiatives that we're doing or things that are not within the regular scope of reporting. For the buyback program, we also have a buyback dashboard that the community made for us.
I love that dashboard. I use it for my reporting on like tokenomics to community as well. A question I have is, how do you handle tail risk scenarios like sharp drawdowns?
This is a really good question because it's a terrible scenario because nobody really anticipates it. And as a DAO, what we should always like aspire to do is to build up our USDC reserve so that when the bear market hits or when there's a sharp drawdown, we are more financially steady. This cycle is not gonna lie, it has really been a little bit harder than the previous cycles because in terms of like even during the bullish periods in which ETH was going crazy or Bitcoin was going crazy, the on-chain lending rates have been generally low and funding rates have remained low as well on both like the centralized side of things and decentralized lending markets as well. What this means is that the attractiveness of holding stablecoin has been lower than using stablecoins to do other things like, buybacks and whatnot. And of course, like altcoins have also been underperforming Bitcoin and ETH, as we all know. So, it made a lot of sense for us to just use the USDC to buy back more tokens, especially when we felt that it was undervalued. But I think in the near future, what we really hope to do is to have a stronger USDC reserve because like we do have some new initiatives within the dYdX ecosystem. So for example, we dYdX acquired Pocket, which could present a higher protocol revenue in the future, and we can also deploy into more aggressive yield strategies like selling options, for example. So I think all this will allow us to hold more stable coins, and that will really be the way we handle tail risk scenarios like sharp token drawdowns.
There's been growing coordination across the SubDAOs within the dYdX ecosystem. Can you share some examples, say with the operations SubDAO, of how you've worked together on the operational side of things?
We work very closely with the other SubDAOs in the dYdX ecosystem, like the Up SubDAO that you mentioned. And I think that's very natural because our role as the Treasury SubDAO is to really become like the CFO of the dYdX DAO. That involves not just the community treasury management, but also things like financial planning for the entire DAO, liquidity management, cash management, and so on and so forth. For example, for Up SubDAO, we have done a few things together, but mainly in the area of cash flow management. UpSubDAO does have their dYdX token in their assets, but their liabilities are and cash outflows are in the form of stable coins because they have to pay service providers, vendors. What we help them to do is that on the asset side, so for the dYdX token, we help them to stake it under the Treasury SubDAO staking program. So this will help to generate yield on their idle capital and also secure further the dYdX chain. And when UpSubDAO needs to procure USDC for its operation, we also help to conduct OTC deals with them. The reason why we started doing it is because we started the buyback program, and buyback program is more from the open market. But if we have us buying back from the open market and the UpSubDAO having to liquidate the dYdX token through market makers on the open market again, then it kind of like
More
nullifies.
efficient. Yeah.
Exactly. So we're like, okay, why not we just save the transaction cost and just do OTC? Then we can plan for things better collectively as well.
So the H1 report hinted at new initiatives like broader dYdX yield strategies and institutional token access. Can you expand on what the community should expect in the second half of 2025 within the bounds of what you can talk about?
There are definitely things that we are working on that I can share and things that I cannot share, but all very exciting. But generally, what we're doing now is to explore ways that we can utilize dYdX tokens and to increase awareness of the dYdX token. For utility, we obviously have the staking program, in which we stake the dYdX token. But we're also exploring other ways, like, for example, providing liquidity on DEXs or using it to write options to harvest the volatility of the dYdX token. So the purpose, like for all this, will be to generate yield while providing ecosystem value whenever possible.
Mhm.
So that's on the utility side of things. As for the awareness side of things, so increasing awareness of the dYdX token to potential token holders and institutions, we're looking at new venues and platforms that people can access or gain exposure to dYdX. But I can't disclose how we're doing it as of now.
Yeah, that's fair. And I really love that in all of your initiatives, even where yield generation is the priority, you're still thinking about adding ecosystem value. So it's not just you want to extract yield for, the DAO, but you also want to inject value back. Yeah, I really think it's commendable. You've written about token utility and protocol economics very extensively. What's most differentiated about the way dYdX is managing treasury versus other protocols in DeFi today?
So I think if we go to like DeFi Llama or DeepDAO, we can see a list of DeFi projects and their treasuries, and we can see that a lot of them have really big community treasuries. But I think more often than not, it's hard to see proper treasury management being done because first of all, it's very common to see treasury just being idle, especially for those that belongs to a DAO, for example, or either really piecemeal initiatives that can sometimes do more harm than good. So, there's either, not being used or there's like too many cooks in the kitchen and, they're all doing their own thing. dYdX is really a little bit different in a sense that I do think that we're doing things the right way because first, we created a proper framework for treasury management, taking a step back and thinking about, okay, what do we really want from treasury management? What does it mean? Who should be responsible for it? And then the community created an RFP process and then entrusted the winner of the RFP to just like, let them cook. And I think like the community is really comfortable doing that because there are proper guardrails and structure to allow for efficient treasury management. The reason why dYdX can do that and maybe other DeFi protocols cannot do that is because of two differentiating factors. So the first is the dYdX token itself, because it actually accrues value from the infrastructure, not in some indirect way, but in a very direct way and in a non-inflationary way. As we talked about, the protocol revenue, which is in the form of USDC, gets distributed to the token when it's staked, and because it's in USDC and not in native token, it is very non-inflationary, and so the tokenomics itself, allows for it. I think the other factor is the fact that we have a treasury SubDAO. It has, dedicated personals. It has a very clear mandate, and it has the best interests of dYdX ecosystem as a whole. It can do its job really effectively by doing things that were specified in the initial RFP piece, but also create new initiative by itself, like the buyback program and new programs that we are planning for in the future. So yeah, I think two things: the token and the structure.
It's been really great to have you. Those are all the questions from my side. For token holders or ecosystem contributors who are watching and want to keep following the work that you're doing, I think we've kind of already answered this through our conversation. But what would be the best way to follow the work of the Treasury SubDAO?
Yeah, so definitely follow us on the dYdX forum with our monthly reports, and of course our DMs via both the forum and Telegram are always open as well.
It's been super nice to have you, G, and hope to have you again soon.
Thank you so much, Winnie. It was a pleasure.